Well, hey, glad to have you here. It's Dave Knight here from 123daytrade.com. Thanks for watching. Thanks for being here. I appreciate you viewing this video today. Today was Wednesday, March 7th, 2018. I'm 3 days away from being 51. Yeah. I'm getting ready to get out of the 50. I'm in the 50s now. I don't want to be there. No one who really in their right mind wants to be 50. I mean, it's better than the alternative, not being 50 and not being alive. But I would much prefer to have all this knowledge I have in my head and be 30. So, while we're wishing, I want to be 29 again. That was a good year. That's when I met my wife, Janice, 20 years ago. I guess I was 29. I was almost 30, I believe, when we met. So 20 years from Valentine's Day of February 14th. So, as you see, plus 110 ticks on the CLPIT strategy today. I netted out 95 ticks. The trade win itself was actually my fourth trade. If I could have eliminated one trade today, it would have been the second trade. Maybe that, not maybe. I'm coming down to the conclusion that my second trade sucks donkey dick. You can quote me on that. But my second trade seems to be a loser just about every damn time I put it on. So maybe it's just better to wait. My third trade, I got in at 62.52 and it ran me out by a couple ticks. So that, I think it went to 62.57 and ran me out. And I don't believe we got above 58 if I'm not mistaken. I think we either got to pivot or a little below pivot. But anyway, trade 4 was the winner. I was short from 62.43 at 10:02 a.m. CST, Central Standard Time, and I exited at 61.33 at 10:54 a.m. CST. And I wrote some notes today, and I want to go through it with you today. In my handy dandy journal that I like to use, and if you don't use a journal, I'm not saying you should have a Jim Rohn leadership journal. It's just that I like this leather-bound journal. If you want to know where to get it, just send me just put it down below or go to jimrohn.com. Anyway, maybe I'll put a link in the whatchamacallit that you can just go to it. Relax. Not every day is this good. I wished it was, but it's not. They're few and far between, but they seem to happen, I don't know, once to twice to 3 times in a month. And they can make or break your month. If you can catch them, then they make your month. And if you don't, well, you're kind of grinded out of trading in a way. So at least that's in my humble opinion, that's what I think. Now you might think differently, but I am a trend trader inside a day trading environment where I don't like to scalp. I'm not a scalper. I don't like scalping. I try to keep I find my best trading days is when I can keep myself under 5 trades. Just as a side note, yesterday I had 10 trades and I went down minus 43 ticks. Those are the kind of days that if I could get away from, if I stopped at 5 trades that day, I think I was down minus 29. So I gave the market an extra 14 ticks, I guess, yesterday that I shouldn't have. And so my balance should roughly be $150 higher than where it is right now. And I got above the 30,000 mark in FTP. So today was, as far as days, today was day 3 of FTP. I was down a little, I think I was down the 314, a little less than $700, and I was able to get up to 270. So I'm plus 270 right now in the account. So I had my first 2 days were losing days, Monday and Tuesday. Monday I was fine with, I was happy with my Monday trading. Tuesday I could have done a lot better on that day. Those are the days that consistently, if I can stop those days, those are the days and there was a time on Tuesday that I could have won that day, but I didn't. Anyway, so long story short, I wrote some notes, and I want to just read them to you today. What I was writing, and I write as the trade's going on, and I can go all over the place with it because it's a collection of random thoughts. But pretty much every day that I'm trading, I'm writing something in my journal, and then I can review it. Like I like to review once a week over my week. I like to review once a month over the month, and then I go, and then quarterly, and then I go semi-annually. Not too normally. I normally go quarterly, and then I do a yearly review in the December time frame. I guess if you can say a half-year review is usually in July, when I'm sitting down with my journals, with my notes, and when I'm not trading. So basically, when I do that semi-annual review, I'm not trading at that point in time. And when I do my annual review, I'm not trading at that point in time either. So I divorce myself from looking at the markets. Therefore, you can relax and you can concentrate and you let your imagination start working for you. You can start, and I find my greatest growth periods a lot of times is when I'm away from the market and then I have my new ideas and then I test them out. So that's how I've grown as a trader over the years. Anyway, today was March 7th, 2018. CLPIT Strategy is what I wrote down on my note here. Which way will the CL go today? The market is not going down at this point in time, and I am 4 trades in. So right now, when the first note that I wrote was, oh my God, I'm at 4 trades in. I'm at my last trade of the day, and the woulda, shoulda, coulda was coming into play at this point. I said, be smart enough to walk away and take the small loss. At this point in time, when I had my 4th trade on, I was minus 15, and I was able to get to break even on the trade when I was writing here. So, in other words, what I was telling myself is be okay with being down minus 15 today and trade for the next day. Allow the market to do its thing and be smart. So I said be smart twice right there. Be smart, be smart. The trade at 62.52, which is my trade number 3, could have stayed in with a little more of a stop loss. So hard to know where to place the stop. And isn't that the truth? I think that, I mean, if you had the crystal ball and you could think, well, this is where, I mean, we use all the different things. We use minor resistance, minor support. We use if it's a lower high pattern, we're looking at that. I usually look 2 highs up on that tick chart. Here's the one here's where we were before. Let's try to get a little behind it, a little above it, or try to trail on that 200 bar SMA. There's all kinds of things that I try to use to help me stay in a trade, right? We all run into that. Once it's easy when you're in a losing trade because a lot of times than not, you got your target and you got your stop loss. Bam, it hits it. You always know when you're wrong, or you should know when you're wrong. But how to take advantage of a big winning day, that's, and today could have been a lot bigger for me. If you go and watch the video, if you do watch the whole thing, God bless you. But I talk about, a missed opportunity, a missed profit opportunity where I could have physically been out of the market. Best case scenario was 60.81 today. That was, and I think I figured out that was about from 61.33 to 61. I actually wrote it down here, 52 ticks. And then the other one that I had was 62.13 or 61.13. 61.33 was my exit. 61.13 could have easily been my exit. So 32 ticks. So I left on the table somewhere between 52 to 32 ticks if I would have been perfect today. Now, that could make the difference in one period of time, and that's how, and I talk about how I learned how to take advantage of these days. How did I go about it? I mean, probably the video that's going to be coming up that's rendering right now is probably one of my better all-time videos that I've put together right now. That how do you stay inside a trade that's going your direction and not go so quick to the exits. And there was a period of time where I was at my last straw for the trading day. There was a time that I was just at break even. There was a time that I was only at 20 ticks positive and only going to net out maybe $5 total on the day. So those are times where, wow, I'm even right now. Let's just take the money and run. And that's a mistake. That's a mistake because trending days don't come very often. And if you get happy with taking profits just to get break even, I'm going to tell you that's a net losing proposition that you're going to find yourself in. Um, Now there's times that you need to get out at break even, and there's times you need to let it run. But if you're constantly getting out of a trade and not allowing that market, so it goes back to the well, I call it the 4 or 5 basic rules of trading now. But the 3 basic rules of trading, right, are cut your losses short, let your profits run, and take profits on the ride. So when you think of cut your losses short, that's your risk management in the trade. That is your way of preserving your capital. And then you have let your profits run. That's your trade management in the trade. That's how you manage the trade. And then the last component, take profits on the run, on the ride. That's your money management component. That's your 3 trading rules in a nutshell. The fourth component that I want to talk, well, 5 components, will be your psychology, right? Your psychological makeup, and then the 5th component is your health. How are you feeling today? Those are the 5 components. And physically, Tuesday, I wasn't feeling so good, and that should have been a signal for me. I overslept, and then I lost 43 ticks. And I wonder sometimes if I would have traded yesterday, if I didn't have to have a trading day in on FTP. You have to have 10 trading days to move to the next phase. Would I have traded yesterday if I would have been a funded trader or not? I'm hoping that those are days that I can say, no, I'm not feeling good. Let's just take that day off and let the market do what it wants to do and not worry about it. Just like when I take my time off in July and I take my time off in December, I don't care what the market's doing on any given day. All right, so where were we? I have kept my losses small and would have stopped myself on 4 entries today. I need to be careful on the second entry. So once again, I'm talking about my second entry. And if you go back through my notes, what I'm learning from myself and trading, it's the best thing about learning what your mental makeup is. So psychological makeup, what makes you tick, right? When you think about you, and I don't know you, I know me. I know that I'm not afraid to hit that frickin' button and go all the way as close as I can to minus 500 on the $30,000 the funded. I'm never afraid to go after $500 loss, and that's a mistake. That is a mental mistake that I have in my mental makeup. And knowing that, to be able to control that other side, it is so tough because you always think that next trade is going to be the winner. At least you should be thinking that, right? Each trade that you put on, you're not putting on it because, oh God, I hope I lose this one. You're thinking, I want to win this trade. And why I want to win this trade, because it was a good signal, it was a good entry, I believe in myself, and all the things that you self teach yourself about trading. Because if you come in with the wrong mental mindset before you even start, and I was not in a right frame of mind on Tuesday. I had no business trading yesterday. None whatsoever. Overslept. I was behind the 8 ball the whole time. I should have been short at 62.86 yesterday. My first trade yesterday was good, and it went out at break even. I should have walked away at +2 and said, you know what? That's what I should have done. Woulda, shoulda, coulda yesterday. I should have just walked away at +2. I didn't. I allowed myself to take +2 to go minus 43. So I went 45 ticks the other direction. Those are the days that honestly, that if you can't control those kind of trading days, they're the days that you basically blow your account out on. And I thank God every day for Top Step Trader and the minus 500. So if that minus 500 wasn't there, what would have been that loss that day? How much would I have been willing to lose on my account? 1,000, 2,000. I've had days where I'm not very proud of, that I've lost over $2,000 to $3,000 in my day trading account. Trading one or two contracts, that's not something to be proud about, but that's my past. Why I put myself at Top Step Trader is because I need an environment that helps me control me. I don't know how you control yourself, but I can control myself by, I say, well, I'll push myself up to that $500 level and I'll stop because I believe that a $500 day is easy to make in any given day. I believe in my heart of hearts that I can make 500 just as easily as I can lose 500. And maybe that's the mental makeup. So when you think about your trading, if you think that I can easily, for instance, maybe in your mind, I can easily lose $250 this day, but I can also know that I can make $250 like that. So if you, whatever your mental mind and mindset is that you believe at that level, I'm at the point where I believe that I can make $1,000 in any given trading day and only lose around 30 to 40 ticks. So that's where my mental makeup is right now. Where I need to get myself is closer to that 30 level, right? Instead of the 40s and the close to 50s and all these, I had 5 extra trades yesterday that I had no business making. All right, so I would wager the second entry I make is a net overall loser as a trade on the CLPIT strategy or on any trading day that I make, my second trade. So if someone would want to go back through every video that I put out and my thing that I put in here, and tell me how many times I won that second trade from losing it, I bet you that I've lost, and just figuring what my mind's telling me, I bet you I've lost that second trade at least 80% of the time, at minimum. So having a bad trade setup on trade number 2, not allowing, jumping into the market, allowing, and I'm not saying every day on trade 2 is bad. I'm just saying on days where I just jump right back in because I got stopped out, and how dare you take me out of the market mentality. That's the kind of crap that you end in the poorhouse, right? Um, Wyckoff, Richard Wyckoff, I think it's Wyckoff, is an important component I need to see more clearly and trust when I see it. Now, if you don't know this, Wyckoff has a concept, or Wyckoff has a concept that he used to teach called stopping volume. And how do you determine stopping volume on your charts? If you don't know what that is, then I would highly recommend that maybe even take my course that I'm putting out. I did figure out what day that I'm going to start it on. It'll be the 21st of March. So March 21st, that Wednesday on the inventory trade will be our first free class, and then we're going to have 4 classes after that that will be paid. I haven't figured out the dollar amount. Don't ask me. I don't know. I want to get rid of the tire kickers, so I want to make the price of entry to the point where I get rid of any people that are the Freddie freeloaders and the people that want the free lunch. So yeah, there's going to be a dollar cost involved in it, and it's going to be my first paid course that I put back on my website. So, and it'll be taken on the 5-week course will be on the inventory day. So my best trading strategy into a 5-week course where 1 week I'm going to be sitting in there for free. We'll talk more about that later. Range defined on CLPIT is the first bar and the second bar quickly formed to be able to have a top, middle, bottom of a range. Now, I'm not going to try to explain that to you today. I would recommend that you go back into the video, look at the 930 area, and look at those first 2 bars that print and then go forward in the video. Maybe I'll put it, if I find, I will do this. I'll put the timestamp on the video itself where I talk about that. And it's just a concept that I'm working in my head, and I thought, well, should I use 1 bar? Should I use 2 bars? Should I use 3 bars? And it comes back to, I don't have the book right now, but the candlestick book that Steve Neeson talks about. I think it's three black, Three black crow. Oh, yeah, that's it. Three black crows are three white soldiers. So white soldiers meaning an up move, and three black crows meaning a down move. So, and I thought, how can I use that information to help me in a fast moving market determine a range? So I don't really talk about the three black crows and the three white soldiers inside the video, but that's where the concept is coming from. Okay, so that's something that you might want to look at. Ziggy Man. My Ziggy Man is the head and shoulders pattern. You hopefully you start. I like to, I got all kinds of names for different things. I got, got the prairie dog. It puts prairie dog in it. It's the Ziggy Man, where I call the head and shoulders pattern. It's just a way that I recognize a pattern when I see it, and I'm able to call it out. Like there's the Ziggy Man, and I draw them on the charts and show you where I see the head and shoulders pattern. So the Ziggy Man, and it's much easier for me to see Ziggy Man on the downward movement when the market's moving up and see where a top is cresting and we might be ready to come down. We went down once again at 10:36 a.m. is what I wrote. Plus 100, plus 110, excuse me, plus 110 ticks win on the CLPIT strategy here on March 7th, 2018. And the last note I wrote down here is ticks that I left on the table somewhere between 32 to 52 ticks. So somewhere between $320 to $520 that I could have done better as an overall day trader today. And that is how and I'll talk about that in this video on the live trading video today. Is probably one of the better videos that I put together, how I handle maximizing out a profit. And I'm always learning more and getting better. And each one of us have to learn how to do that, right? You got to learn how to let those profits run. I can't stress to you enough how important it is to allow the market and allow yourself, your mental makeup, to take those big profits and those big wins. Believe in yourself enough that you have the ability to hit those big wins. All right? That's what you've got to get there. You've got to get there. You got to get there. That's my talk for the day. This is Dave Knight here from 123daytrade.com. Thank you for watching. Thanks for being here. I'll see you on the next video that I put together. Bye for now.